more business boosting content, subscribe to our channel, hit the notification bell, and like our posts.
Right, a very big welcome to another edition of Webinar Wednesday. Of course, the leading business webinar series, and of course, always exciting. Born in the pandemic, but it's become one of our big attractions. And of course, we've had the opportunity and privilege of having hundreds of thousands of business owners from all over the country and some parts of the world who watch this event. And another exciting one this morning. We know that global trade and Forex and cross-border payments has become a big point of discussion for SMEs and business owners. So this morning it's all about that. But let us know wherever you are. Please tell us in the chat where you're from, what are you hoping to achieve this morning, and of course, if you have any questions, please pop them into the chat. If we can't answer on the chat, we will get back to you after the webinar. But yeah, and importantly as well, technology, as we know, sometimes fails us temporarily. So if something goes wrong, for whatever reason, so far so good, it hasn't happened. But the important answer to that is we will be back. So a very big welcome. And of course, Danica Besaidenout is our guest this morning. Danica is the CEO of Zynched. And I'm not going to tell you much about Danica, and I'm not going to tell you much about Zynched, because that's going to be from Danica herself. And Danica, a very big welcome to Webinar Wednesday. We're truly grateful to have you on board, and of course, a great partner of the NSBC. We're privileged about that. So Danica, a big welcome to you.
Thank you so much, Mike. It's incredible to be a part of today's event. We're very, very excited. It was really fun putting together just some information around this topic. This is where Zynched, and then also our parent company, Best Forex, this is where we specialize in, where we are expertise laid. So to communicate and share that with this platform is great. Thank you for the opportunity.
And Danica, tell us a little about the webinar this morning. I think coming from you, the expert, give us an insight onto this webinar this morning.
So this morning, I want to just touch on a few topics. As you've mentioned, it's becoming quite relevant now, with especially even after COVID, when it comes to global trade, foreign exchange, and those cross-border payments, and just the intricacy that's around it, and actually how simple it can be. But because there's not a lot of information when it comes to looking at the industry, where there are skills and knowledge, and how accessible it is, we found that a lot of our clients do struggle to access the correct information, to understand who they should be partnering with, to facilitate these actions. So today I just wanted to give a nice brief but introduction to global trade, foreign exchange, and cross-border payments to anyone watching when it comes to looking at what they are currently facilitating within their company, or even as a private individual who wants to move money in and out of the country. How do we facilitate it? Where do you even start if you haven't done it before? And even those who are seasoned by moving money in and out, what's a better way and more informative way of doing these things?
So Danica, I've got a couple of questions, but I'm not going to engage in those questions until you're ready to let me, because I know you've got a great presentation. So whenever you allow me, or wherever you want me to ask the questions that have been put forward to me, please just let me know so I don't interrupt you. I like talking a lot, so I don't want to interrupt you, but please let me know. So Danica, yeah, back to you.
All right, fantastic. Thank you, Mike. Will do. So as mentioned, I'm CEO of Zynched, but I'm also COO of Best Forex. And the relationship between the two companies, Best Forex has been in the industry from 2014. Oh, I lied. Zynched is from 2012. But because of our place and role in the industry when it comes to international banking, we saw the gap. We saw that older generations had a lot of information, a lot of depth, and now up-and-coming individuals coming into the industry, that information isn't filtering down. And that is how Zynched was brought to life, that we want to bridge the gap for future generations and just people who are just newly being introduced and having international trade when it comes to whether you're an individual or a company. And then I also used to be a software engineer, so I absolutely love technology, and being able to combine my expertise in international banking as well as my love for technology, it's quite a great experience to be able to develop Zynched as we go along. The few topics that I want to just touch on today, we're just going to look at the global foreign exchange and trade landscape, how that matters to the South African businesses. I want to talk a little bit about the regulatory environment that we as South Africans operate in when it comes to financial surveillance. I want to look at the foreign exchange fundamentals, currency risk and how it arises, and then also how to combat that risk by managing that risk using a few tools. Then I'm just going to go over some global trade basics, and then we're going to just look at some key practical takeaways. So this is a very interesting slide, and even individuals and people that we've come across that has been working in this business for 20 years do not understand the landscape to its fullest depth, and to understand how phenomenal and how important and integral it is. So when it comes to the global landscape, on a daily, $9.2 trillion is traded every single day. That is, it sounds like an impossible number, but it's factual. And the most incredible thing is, as South Africa, the South African rand, 1.1% of that $9.2 trillion is traded in the South African rand. So as South Africa, we might feel like a small country, but when you look at from a global landscape, it's quite substantial to think that we are the 18th most traded currency in the world. So individuals and companies playing in this space, the limitations are almost unknown because it's such a gigantic, enormous industry. Now, how that matters into South Africa, and this is where I want to put it back to you, Mike.
All right, Danica, my first question let me pose. From your perspective, why is foreign exchange such a critical topic for South African businesses at this very time?
So in South Africa, businesses that engage in international trade, they operate in a very high volatile currency environment. And that is because our economy is so much linked to imports, exports, global capital flows, exchange rate movements. It directly impacts pricing, profitability, and competitiveness. Even businesses that don't see themselves as international are often indirectly exposed through their suppliers. You can see now what's happening with fuel. That directly impacts logistics. And then, of course, it's imported inputs. So if you look at just South Africa and how we play into this industry, is that more than 60% of South Africa's GDP has an FX flow. It touches onto that. Now, that's your importers and your exporters, your standard companies dealing with goods in and out. If we add on the actual individuals, when you look at foreign direct investments, your single discretionary allowance, or companies who want to invest abroad, when we look at immigration, and then also foreign nationals moving in and out, if we add that to the 60%, 80% of South Africa's GDP has a foreign exchange leg to it. So again, it is so substantial, thinking that 80% of our GDP, and not a lot of people know how to navigate the environment with all the risks involved with it. So one of the big things that we found with our clients, that, you know, when they hit a wall, is when it comes to financial surveillance. It's now been branded now as financial surveillance. It used to be known as exchange control. And that is just the regulatory environment on South Africa. That is to ensure that any cross-border transactions is regulated by the Reserve Bank. But then also individuals or companies like myself, we as an FSP, financial services provider, need to adhere to the Financial Sector Conduct Authority to make sure that what we are doing is just in accordance to the Reserve Bank. And then also we need to adhere to the Financial Intelligence Center. And they specifically look at regulating the money coming in and out. Where is it going to and where is it coming from and for what purpose, to ensure that there's no terrorist funding, there's no fraud happening in place. So it's a very highly regulated environment when it comes to individuals and companies having to move money across borders. And it applies also to payments to non-residents, the imports and exports, offshore emissions, and quite a few other, like I was saying, with immigration. So currently with immigration, there's a big structure that needs to happen, which is also, then we can go onto the other side and how it gets involved with such as well. So there's a lot of components that people need to navigate moving on. But every international transaction needs to comply with exchange control regulations. And those who are a little bit in the industry know that the framework is also going to be changing now. So it's good to be abreast of what's happening in the industry. So the risk flow. So it can be small little things, and it can create quite big gaps or impacts in your transaction. So if you have bad documentation, it directly causes delays. Now the delays, but now it causes rejections. There can be regulatory flags, and there's business disruptions. When it comes to financial surveillance, if you need to actually apply for a SARB application, there's a 4 to 6 week waiting period. So in that time, your business needs to run. So there's a lot of things to understand when before doing payments. You want to make sure that you are compliant so it doesn't cause business disruptions later on with the Reserve Bank coming back and being, this is not right, we need to solve it now. It causes disruptions that could have been already mitigated from step one. Now, the business reality, how does this all fall in together? So cross-border trade introduces a multi-layer of complexity. There's currency movements. As I mentioned now, there's regulatory compliance. We have counterparty risk. So it all comes down to that there's a lot of uncertainty that when you are dealing in this industry. And for businesses, you face cost unpredictability, which then also goes straightly into revenue unpredictability for exporters. Quickly, what is foreign exchange? So it's always funny when I use the abbreviation FX, because FX and crypto is quite a big buzzword in these days. And we always have to explain what's the difference between foreign exchange, the old traditional way, and trading cryptos as when it comes to FX. So it's basically practically just converting one currency into another, what that process is. It is used for trade, investments, and international payments. And these exchange rates, which I will go a little bit into more, is market driven, and it's influenced by global and local factors. If you look at what happens to the rand when something happens in America, or when something happens in Europe, or there's a global thing, you see that rand is jumping up and down. And that's why we say the rand is so volatile, which means that people engaging in international trade with the South African rand needs to understand the impact and how to mitigate those risks. So there's things called spot and forward rates. So a spot rate, those who do deal with international trade or have done payments, this might ring a bell. But that just means it is the current market rate, and that is typically settled in 2 business days. That's all you need to know. When you need to buy dollars right now, it will settle in 2 days. You can also book a rate for the same day, but then we can get a little bit technical. But then let's say, for instance, you know that you have a payment that you have an invoice that came in and you need to facilitate payment, but only in 30 days time. But the rate looks really great right now. Instead of waiting, because we know that rand is doing this up and down, up and down. So you can actually book a forward rate, which is just a fixed future rate. It is agreed upon today for that future transactions. And the only differentials is the actual interest rate between the 2 currencies. So if you take a spot rate now, it will be 18 rand, regardless of what the rate is doing in those 2 days, you'll be paying 18 rand to the dollar. If you do it in 30 days time, it might be 19 rand to the dollar, but there is a little bit of interest rate differentiation. So that's just an idea of spot rate versus forward rates. And then you can settle things differently. By using a forward rate, and I'll get into it, is a great way to manage your FX or your foreign exchange exposure, meaning you're not playing a wait and see game. You actually book your rate, you can do your costing accordingly, and you are priced right. Instead of waiting, the rand might jump, or it could come down. And it's a little bit more like gambling, and that's where the uncertainty comes in. So with the forward rates, it's called a foreign exchange contract. And this is, as I said, it's an agreement to lock in the exchange rate for that future date. And it is used to protect against adverse currency movements and to create certainty in pricing. So that when you are doing your costing for your clients, you know already the margins are worked in, your profit is worked in, and everything is happening. You're not having to pass that volatility down to your customers. The trade-off, it protects the downside, meaning if you are locked in a rate for 30 days and the rate and the rand becomes stronger, you can see it as, oh, now I've lost out on it. Now I could have made more profit. But in the long run, creating consistency is a lot better for you to manage your pricing and how you deal with your customers than trying to gamble in the market and then hoping and praying that, oh, maybe the rand will be good, which we see it's really hard to predict what's going to happen. So using FECs or foreign exchange contracts is a risk management tool. It's not a speculative tool. Over to you, Mike.
Yeah, you might have touched on this a little bit, Danica, but a lot of business owners hear currency risk but don't fully understand it. How would you explain in simple terms, and why does that matter?
Yes, so currency risk is simply the risk that the exchange rate changes between the time when you agree upon the deal and the time that payment needs to happen. So if the rand weakens during that period, your costs can increase unexpectedly, or your margins can actually shrink. So the key issue is uncertainty, and uncertainty makes planning really difficult. So the exposure exists between that order or initiation date and that payment of receipt. And for FX movements during this period can, as I said, it increases your costs, it can reduce profits, it can impact your competitiveness. And then the opposite is also true. It can actually decrease your costs, it can increase your profits, and it can make you more competitive. But it's a gamble if you are not actually planning and putting up a risk framework to allow you to be a lot more competitive and a lot more certain in what you are doing. A practical example, as I said, day 0, it's 18 Rand to the dollar, your import order is placed. You only have to pay in 60 days. But in 60 days, you didn't take a foreign exchange contract. Now you ordered goods for $18, you have to pay 19 Rand per dollar. So that reduces your margin or almost completely eliminates it, because now your cost has increased by 5 to 6%. So this is such a small thing that not a lot of people account for, but it can make such a big impact on your profit margins that by actually just managing this level of risk and setting out what is your risk appetite and navigating through it, you can create a lot more stability when it comes to your pricing and your margins than trying to cowboy through it and hoping for the best. Over to you, Mike.
Yeah, Anika, an important question here. What are some of the biggest mistakes you see companies making when it comes to managing their FX exposure?
So this is something that we come across quite daily, going to sit with clients, talking about their foreign exchange, is that almost nobody has a formal foreign exchange risk management strategy. They take that, I'm just going to wait and see approach, or they try and predict the market. And then the companies that don't constantly engage with it, they might see it only as a once-off event. So it's a very isolated event, and they're not planning ahead and kind of looking at it holistically. But the thing to remember is that it's not an exact science, but not managing your FX is a decision. And knowing that by not doing that, you are going to carry risk. So a very simple risk management framework. This is something that we offer to our clients to help them, to sit with them, to break it down, give them a lot more information and understanding and context so that they can see for their business what is going to be the best risk management framework. So you have to identify your exposures. You need to understand where exactly are you vulnerable. Then you need to determine your risk appetite. Then you need to look at using appropriate tools. So for the instance, an FEC, booking a foreign exchange contract, is a tool that you can use to help manage your risk. Then it's also looking at monitoring and adjusting regularly, because this framework is would be like a living document, because the industry is so volatile, because the rand is jumping around so much. So you would need to adjust accordingly and maintain it and navigate it. But the main rule is consistency over prediction. If you decide this is your risk framework, stick to it for a certain period of time, see what the outcome is, and then only adjust. Do not stick to it for one day and then cowboy into another strategy the next day, because there will be no way, and you'll have no data to even understand exactly what this risk management framework is assisting you in, and how can you improve it. So briefly, let's just look at how global trade works. So there's 3 keys that are involved. Key flows. It's goods and services moving abroad and into South Africa. I'm doing it from the perspective of South Africa and outwardly. It's the payments for those goods, and then also all the documentation, the invoices, the shipping docs, that everything that has to do with those goods moving in and out of countries. And there's multiple parties involved. You have the buyer and the seller. We have the banks that need to facilitate it. And then, of course, the logistic providers that are actually physically moving the goods where they need to be. And the thing to remember is risk exists at every stage of that transaction. From the moment that the order is booked, you have currency risk. The moment that goods start moving, now you have risk of your goods. Where is it going to land? And whose risk is when? So these are critical things to understand in the flow of trade. So key trade concepts. So we're looking at payment methods. We have an advance payment, which gives you low seller risk. Open account, which is what 95% of the world works on, is open account. And then, of course, you get documentary collections or letter of credit. So this is a balanced risk. Then things, when it comes to Incoterms, it defines the responsibility, as I said, who takes responsibility of the risk at what point in time. So the Incoterms will actually state whose responsibility is to transport in that space of the flow, who has insurance covered for that, and where does the risk transfer. And this clarity upfront reduces disputes later on. For if whatever happens, especially if you think about sea freight, if something happens and those goods land at the bottom of the ocean, who was responsible and whose insurance is covering what? So where does the risk sit when you look at global trade? So there are 4 types of trade. So we're looking at commercial trade. So this is where suppliers or buyers fails to perform. When you are engaging and you decide as a business, I want to start exporting or I want to start importing, looking at who your suppliers and your buyers are is a crucial risk mitigation action, because whoever you are getting into business, and they need to have a good reputation, they need to be trusted to ensure that dealings go accordingly. There can be payment defaults or delays, and then also quality and delivery disputes. Then if we look at country and regulatory risk, so of course South Africa is not the only country with exchange control requirements. There's a few other countries, and understanding the exchange control requirements for those countries are critical to understand how is money going to flow in and out, how are goods going to flow in and out. We could also look at political and economic instability. You don't want to order goods or send money to a country that is currently at war, because there's a risk that it's not going to be executed the way that you need to. Then there's also regulatory and sanction changes. So also we cannot be dealing with countries that are on the sanctions list. It's the Reserve Bank will reject it. And then, if you made promises and hoping to get things in, but it's a sanctions country. So understanding who you are dealing with is very important. As we already spoken about, currency risk when it comes to foreign exchange, the volatility and how that impacts pricing, how margin erosion can come from exchange rates moving, and then also just the uncertainty between order dates and payment dates. Then we also have transactional and operational risk. So here we're looking at the documentation errors, shipping and logistic disruptions, or delays in customs or settlements. So documentation is gold when it comes to these things, because that is the only way how to track and monitor what is happening with the goods and the money. some practical takeaways. Guys, understand your exposure to foreign exchange, right? Don't ignore currency risk. Don't take the wait and see approach. It's really important for your business to understand the risk that you are engaging with and having that risk framework put out. Even a simple one just to see and try and how do you better your dealings. Use simple tools to manage volatility. Using an FEC, booking your rate in advance, and okay, great, this is your costing. You don't have to stress about it. There's also ways of viewing if you have a foreign currency account, how people use foreign currency account. I know I don't have a payment right now, but I might have in the next month. So as a South African, we can actually hold foreign currency in a foreign currency account for 30 days. So if you see a good rate, hold it, and okay, in 2 weeks or 3 weeks or in a month's time, we can pay it out. Then you already have the dollars, you already have the euros or Australian dollars, and you can actually utilize that. And then you also save on the conversion costs in that time. The number one thing that I would say, and we are very focused on compliance and ensuring that we mitigate risk, is you have to be compliant with regulations. And it becomes complex, and that's why it's so important to ensure whoever you are partnering with, whether it is a bank, whether it is a FSP to help facilitate your intermediary company, it is important to understand that, or to know that they have depth and knowledge on how to navigate these regulations, so that anything that is going into the bank is clean and it will be accepted, and your payments can flow and your goods can come in. So there's no disruption directly on your day-to-day business. And the goal is to reduce uncertainty and to improve your decision making. Over to you, Mike.
Now, you've touched on the takeaways here. Are there any other, look, we know there's a lot of SMEs now wanting to trade internationally, Danica. Are there any other practical steps that they could take to manage from day one?
Firstly, like I said, check what is your exposure. Whether it is imports or your exports or your supplier payments, make sure that you know who you're dealing with. Secondly, it's the documentation. It's really a crucial point where your documentation and your compliance process need to be correct from the start. And then also working with the right partners. An FSP like Best Forex, we exist because there's a gap. There's a need for a certain level of service. There's a need for that knowledge and depth and experience. So to make sure that whoever you are dealing with, who are helping you facilitate these payments or these transactions, they know what they are doing. And from start to finish, their main goal is to make you competitive and to make you compliant. That should be the focus on that. Okay, so I've said a lot, and I hope it wasn't too fast and it's too high level. This is a great way just to introduce these topics to people who are starting to deal with it. We also do much more in-depth. We take each topic and we deep dive into it. So we'll definitely be looking at making that available for everyone as well, if you want to know a bit more on the topics that we've touched. But I wanted to just explain now, so how does Zynched come into the whole scope of it? So we are a digital platform that is focused on simplifying all these complexities when it comes to global trade, foreign exchange, cross-border payments, financial surveillance for businesses and individuals operating internationally. And what we aim to do is to combine foreign exchange insights, trade knowledge, the regulatory awareness, practical tools into this one accessible ecosystem. And that's the main thing. All this information, if you think about the Reserve Bank, the manual is out, you can download it from the Reserve Bank, but to actually understand and comprehend the context around it, people are specialists in financial surveillance. So it's very important to have access to it, but also to understand the concepts around it and to be able to be guided through it. And that's where Zynched really comes in, because how we see it is the power is in the question, but for us, it's where AI, which is a great tool, but meets human expertise. So what we've done is we looked at global trade, foreign exchange, financial surveillance, and we went and to go look, and we're quite fortunate because most of the experts we actually have access to, and it's part of our team. And we sat with them and we started looking at where the gaps are and started curating content to enable anyone that goes on Zynched, on the Zynched app, for you to ask it a question, and it's like having an expert at your fingertips. So before you needing to have to wait to be passed around on a phone system in the bank, or you're not getting the right answers, you'll already be able to get depth and things. And the difference between Zynched and any other AI that's currently out is that because we overlay it with human expertise, the main content source is the content written by all the experts with 40, 50 plus years in this industry. So we've made sure that we wanted to give information that is correct. So that's how Zynched house, and then how Zynched was born is with my our parent company, based Forex. And as I said, we've been practicing for over a decade, and our main focus is to make you more compliant and make you more competitive. And we do this by simplifying things. We ensure that when it comes to the exchange rate, we are completely transparent. You know exactly what you're engaging with. Our transactional costs are extremely low. We provide you a client portfolio manager. You have direct access to a dealing room. And the most amazing thing is you don't need to change your bank. Your business banking stays where it is. We help with tax clearance certificates. We help with the Reserve Bank applications. We give a full online FX system where you can help you manage your risk and see all the actions, see exactly your trades. So it's FX solutions, foreign exchange solutions for importers, exporters, but also investors, individuals. So we don't just look after companies, we also look after individuals. And again, we like to keep things simple. So we don't do contracts, we don't do commitments, we don't do invoices. And it's very easy to become a client. It's the normal banking FICA process. We open an international treasury account, you agree to our T's and C's, and we start taking all the complexity and all the frustration when it comes to doing international payments off your hands, and we facilitate it so that you can actually focus on your business, running your business, growing your business, and we just become your FX solution partner. Over to you, Mike.
Yeah, Danica, we get a lot of correspondence, and I think what you've covered well is that, how to mitigate the risks in trading globally. And then the next question is, okay, now show me the way, step by step. And of course, Zynched is the solution for that. We do a lot of surveys around all areas of business, but international trade is become the flavor of the day. And so for me, it was very interesting. And to all our attendees, if we haven't answered all your questions, please pop them on an email to info@nsbc.africa, or alternatively directly to Danica. I think your contact details are there, Danica. I think if it's not, they're going to put it up any second. But if it's not, just contact info@nsbc.africa, and we will forward that on to Danica. There it is, Zynched. Go onto the website and you'll get the details there. But an interesting topic, and I know, Danica, we could probably sit all day talking about all these issues. And it's become an important part of every SME. And, people don't understand the amount of SMEs who are ready to trade globally. And so I think this conversation can keep going. And I certainly appreciate your time. And by the way, I love the name Zynched. How did it come about, may I ask?
So Zynched has had many iterations of its existence. As I said, we established the company in 2014, where it was first going to be a book. So as I said, in my team, I have a great group of ex-bankers, ex-Reserve Bank individuals, and we wanted to write this book to encompass everything. And then it kind of iterated into, no, let's start a training academy and to actually start upskilling, departments within banks or, small FSPs and so forth to help and even, provide information to the public. And then we had one of our directors, one of his friends, they are in the retail space, but also into tech. So we partnered with them as our AI tech partner. And Zynched the name itself it's a play on words for synchronization. So we want to look at synchronizing and having this whole ecosystem of all this information, all the facets that it's touching. And what's more important is that we see ourselves as an educational tool. The ED So Zynched, and you'll see the ED at the end. So that stands for education. So we are very much, part of our vision is empowerment and education for people who've, just starting out, graduates or students trying to get into the industry, but also people who've been doing this for 30, 40 years, and they have one way of doing it, and it's just, what's a better way of doing things? Time evolves, tech evolves. So so it's a great company to be a part of. We're very passionate about upskilling and sharing information, because at the end of the day, the more upskilled and more educated people we have when it comes to international trade, it will have a direct correlation to how well South Africa's economy is doing, because we live in a world, our country is made up of so many entrepreneurs and business owners. So to educate that framework, it will just benefit the entire country.
Danica, very interesting, great comment, brilliant presentation. There it is. To all our attendees, I just want to say thank you very much for attending. Certainly insightful for me. I can't get enough of it. And happy trading globally. And also just final message from my side. Besides that, Danica, thank you for your time. And to Zynched, well done on what you do. It's an impressive story. You do impressive things, and certainly you play a major role in the success of SME South Africa. So we truly grateful for that. But just before we end off, let me give you the opportunity, if you don't mind me, just don't forget about the Business Show Africa. The delegate drive is now on. We're heading for a world record of attendance. It's not about a world record. It's about the amazing arena for 2 days of what you can actually get there. What most people say to me, what you can't get in 10 years, you'll get in 2 days at the Business Show Africa. There is the website. It's completely free to attend, but we will peak and cut off delegates this year because, of course, through security reasons. So if you haven't got your ticket, get it now, and we'll see you at the Business Show. But there's a lot more happening before the Business Show. And Danica, we will continue this conversation. And thank you very much. And again, to all our attendees, please, if there's anything you need, or if you'd like to start trading globally, Danica is the person. She will help. And to Zynched as a brand for partnering with the NSPC, truly grateful. And to everyone, have a wonderful Wednesday further. Take care. All the best. Thank you, Danica.
Thank you, Mike.
For more business boosting content, subscribe to our channel, hit the notification bell, and like our posts.